First up, we have DXN Limited, ASX code DXN. The company designs, engineers, manufactures, maintains, and operates data centers. Presenting for the company today is Shalini Lagrutta, CEO and Managing Director. Shalini, thank you for your time. Over to you.
Thank you for having me, Abby. Appreciate it. Hi, everybody. My name is Shalini Lagrutta. Could I please go to the next slide there? DXN Limited, we're a ASX listed manufacturer of prefabricated modular data centers. So I became CEO just slightly over 2 years ago into the business. And the focus for me when I first came on essentially was a restructure and the turnaround of the company, cleaning up the balance sheet and refocusing the business on effectively the growth aspect of our business, the prefabricated modular data center division, and as well as operations of small regional data centers. So there's two parts to our business, which I will go into slightly later. We were established in 2016, listed in 2018. We're a small team distributed across multiple jurisdictions. I'm based in Sydney. We've got a manufacturing plant in Perth in Western Australia. We've got an engineering team in Kuala Lumpur in Malaysia. And we've got 3 other board members, non-executive board members listed as part of the board. Essentially, we design, build, and own as well as operate our modular data centers to global best practices in a highly secure environment. If you're going to go to the next slide there, Abby. So there's 2 parts to our business. One is we manufacture modular data centers, and what that means is we prefabricate them in our factory for our global customers. So we've got regional customers, we've got Australian customers, which in various market segments, but we've also got international customers as well. Our first and currently only manufacturing plant is in Western Australia, in Welshpool. We maintain full control of manufacturing from start to finish. So it is fully designed by us together in conjunction with our customers. Our engineering team effectively works on a highly spec standard for multiple customers. So, and I'm talking about global internet companies, subsea companies, telecom companies, as well as mining. We engineer that and we develop the blueprint for the build and manufacturing. We then put all of that together in our factory, including right up to factory acceptance. So the customer comes to us, tests and completes the checklist of factory acceptance before it's shipped to site. So it condenses the entire time frame of actually deploying these modular data centers to site and solves many different problems that customers face as far as deploying the data centers are concerned. So that's one part of our business. In our FY24 results, around 75-80% of our revenues were from modular data centers. We've also got the other part of our business where we own and operate data centers, edge data centers. One's in Darwin. We've got a 75 rack facility there, and we've got another one in Hobart in Tasmania with 35 racks. Most of our customers in these 2 regional data center sites are government, telco. We've got subsea operators as well, and they're all on long-term contracts. Revenues are summarized in some of the later slides as well. Next slide. So just back to where we see quite a bit of growth coming into the business. So a lot of what I've been focusing on and the company has been focusing on over the last few years is to focus our business around the cleanup of the balance sheet. We've been doing that. We've just completed a capital raise last week, and as part of our use of funds going forward, we are focusing on new products going into the modular data center business. We have an advantage in this space. We are able to design and deploy in a very quick way with relatively lower investment. When I mean lower investment, they're not necessarily cheaper on a dollar per kilowatt basis when you build it, but in order for us to deploy quickly while the site is being prepared and the manufacturing is ongoing in the factory. There is a huge advantage in a world where resources and highly technical staff are available. This shortens delivery time frame, which is a massive thing for a lot of our customers. So that is one of our advantage. In terms of end users, there is quite a lot of requirements for on-site, on-prem deployment. So, for example, you've got mining customers, you've got cable landing stations. Not everything has to be in the cloud. There is a growing requirement for edge data center deployments, on-prem, on-site requirements. And what we do is we solve that problem for these customers who are deploying on-prem, on-site. Next slide. A very high-level summary here around our data center overview. And just for anybody who wants to sort of refer to any of these deck, if you've not already seen it, this was announced in our capital raise deck, use of funds last week to the ASX. It can be actually downloaded from there as well. We did in FY24, we did 12.4 million in contracted sales for the modular business. Of that, 8.2 was recognized as revenue. And it is important to remember how we actually recognize revenue. We do it through AASB 16. So as we build and as we hit the milestones for customer builds and customer requirement, we start recognizing the revenue. What the other thing to highlight here is we've had consistent growth of modular data center requirements. In the past, when I first started the company, when we were trying to clean up some of the requirements around balance sheet, we were focused on smaller deals between sort of $500,000 to $2 million deals. We signed our very first largest deal that we've ever signed at $6.5 million earlier this year, and because we're moving into that sort of space where we can fund some of these bigger projects, we are going into that larger and larger type module deals, as you can see. We've got work in hand from FY24, contracted sales, so basically business that contracts we've already signed, and ongoing build that's coming into FY24, totaling 8.9 million, while we've already closed 1.5 million in new orders in FY25. We've actually announced to the market that we've provided a guidance of 16 million revenue for FY25, of which the 8.9 is backlog already. I think it's also just one point to highlight is to date, we have deployed over 80 modules globally, and this is all over the world, of which 21 was deployed in FY24. Next slide, Abby. This slide is, I think, quite interesting. It sort of gives people an idea of where we currently operate and where we are headed to. And some of the use of funds that we had as part of our capital raise at the end of the week before last. So the first 3 quadrants on the top there, that's cable landing stations, mining, and edge data centers. That's what we do currently. There are existing contracts that we deploy. We've historically had a lot of requirements for this. This continues to grow. It is really important to remember that the cable landing station opportunities, even edge data center opportunities, are continuing to grow in size. The pie is getting bigger. Just specifically on the cable landing station options, and requirements, we're starting to see a lot of growth in multiple cables that are being built across Australia, connecting into Australia, but also Asia Pacific, where we sell into. We've deployed recently to Timor-Leste, an international cable landing station built in the factory and shipped to site. So the pictures you see there are actual deployments of our modular data centers that's prefabricated fully the way you see it in the factory before it's shipped to site. And the opportunities that you're starting to see, for example, in landing stations, they go from one single module at 30 kilowatts right up to multi-megawatts of it. It could be 1 to 2 megawatts type sizes all the way to, and that would be 20, 25 modules into one larger space. That's the type of opportunity there is for us to leverage with the right sort of balance sheet that we have. Mining is ongoing. That continues to be a requirement for additional on-prem resources and automation in mining sites. And by mining, I mean gold mining. So, you know, a lot of our customers include Rio, BHP. We've got Pilbara Minerals, Anglo American. They're all customers, existing customers. Edge data centers. That's an existing market segment, and that is essentially a lot of different customers who are actually building co-location space, and this is on the edge side, so between 50 to 2 megawatt type sizes. That's a sweet spot for us. That's an existing market segment as well. The bottom three are where we see quite a bit of growth in new market segments. And I think with data centers, it's a dynamic industry. Every single day we learn something new and new applications. We have interesting options, lots of interesting requests globally coming in for inference AI sites. And for those of you who are familiar with artificial intelligence, you've got training sites, you've got inference sites. If you're talking about between 1 to 2 megawatt type HPC direct-to-chip cooling solutions, DXN's value is we can actually prefabricate that in the factory, work with all the different suppliers that do direct-to-chip cooling, whether it's high-density racks, and these are sort of 120 kilowatts per rack. It's 10x power in comparison to what a regular edge data center would be. That's what we can be actually putting together. So in our use of funds capital raise that we have just completed, this is a focus for us into FY25. Defense and portable data centers is also a new market segment for us. There is a big focus on that going forward. DXN is a sovereign Australian listed company, and we're well positioned with the Australian government and the partnership that Australia has with the Five Eyes and AUKUS as well. And the final sort of market segment that we focus on is indoor solutions. And these are sort of, for want of a better terminology, they're Lego blocks that we actually prefabricate in a factory that are deployed into a data center and built as and when they need it into a structure that that is compliant to a lot of customers' requirements for hyperscale customers like Amazon, Microsoft, etc. So these are the sort of market segments that we focus on in a nutshell. Next slide, please. Very quickly, here is a list of some of our existing customers in all the different market segments, and they're continuing to grow. We have customers in the global internet company space as well. We have enhanced NDAs with a lot of them, so we don't name them. And some of the requirements around, for example, cable landing stations. And this is if you go into sort of a website called Submarine Cable Map, which is by Telegeography, you will actually see a lot of the different cables that are being installed that already exists, but also being planned over the next 10 years. And our position in that is quite strong because we've already supplied quite a lot of global companies for the cable landing station market segment. Next slide, please. So I think in a nutshell, you really, the point here is there is continued industry demand. DXN is well positioned because of our focus into the modular data center space, prefabrication design. I think where the capability comes from and the differentiation that we have in the market is that we deal directly with the end customer. And this is whether it's global internet companies or mining companies. We understand their requirements. We solve their engineering issue rather than having engineering resources in-house, especially at the edge of the network. We provide them that engineering arm that solves a problem plus offers a product at the same time. And so that enables us to enter global internet companies and sort of blue chip companies that a lot of other companies would not be able to, thereby availing us the resources and the know-how to be able to design a solution that we can actually build and deliver. And I think it is also, a testament to the team's efforts, despite, some of the difficulty in the initial stages of DXN's listing. We have been very consistent in the modular manufacturing part of the business. We've always made money on these deals, and we've deployed over 80 to date, positioning us well for the future. Next slide. I wanted to sort of highlight a little bit here around the opportunities we have on our existing market segment, the cable landing station industry market segment. This is subsea industry. We've done over 80 modules to date globally, but in terms of landing stations in the APAC region, there is a lot of new cables that are being built today, and we're well positioned to support a lot of that. In terms of what global internet companies are doing, and especially with requirements now coming through with AI, what we're starting to see is there's a lot more landings, there's a lot more cables actually being built, there's additional spurs, and so we're quite excited about this particular market segment ourselves. Next slide. This is our FY24 highlights that we issued to the market a few weeks ago. In terms of group revenue, we did 10.8 million for both the modules and the data center business, with our very first EBITDA positive result in our history, turning a testament to the team for the turnaround of the business. And in terms of what we have done into modules and data centers is provided as a split there. Very quickly on the outlook, we've actually provided a guidance of 16 million with positive EBITDA anticipated for FY24. Next slide. We've got a strong board that is behind me, as Layla has come in and she's technically no longer interim CFO. She's permanent CFO and will also be taking on the COO role in the company. Abby is our chair and non-exec director. She has plenty of ASX experience. She came on earlier this year and she's given us a level of professionalism around our reporting, which I value. Dr. Mio On is a tech entrepreneur. He himself is listing a company, an ASX 500 company, and a strong venture capitalist, very well known in the US and subsea cable markets. And he brings a lot of contacts and relationships and support to me and the team. Brendan has been on the board for a couple of years now. He provides that consistency. And together with this sort of relatively two of our new directors and our existing team that we've got, we're well positioned for growth. I think that's the last slide there, Abby. Yeah, we've got one more slide, just on a high level. We're a listed company specializing in prefabricated modular data centers. We're well positioned for a lot of growth that's coming in for data infrastructure. Australian, uniquely Australian ASX ASX listed, well positioned for a lot of sovereign requirements. We've done quite a lot of deployments, both locally and internationally. Yeah, we've also done quite a bit of work now in the restructure of the company, including our existing debt facility in the latest capital raise as well.
Thank you, Shalini. So I do have a lot of questions coming through. If you have the time to answer a few, that would be great.
Sure, no problem.
First off, so what's the GM percentage for modular manufacturing now? Noting FY23, it seemed to be around 35%. And October 23, the company was targeting initial 15% improvement in the near future.
Yeah, so I'll answer the first part, October 23. So I think overall, what our focus is growth. We maintain a minimum margin on any deal. So our modular manufacturing has always been consistently above 35% gross margins, and net margins is subject to our operational growth, our operational costs at any given half as well. I think as we go into FY25, the intention is to maintain our EBITDA positive position, and but at the same time, bearing in mind that we are going from sort of $500,000 to $1 million deals to now $3 to $6 million deals. We want to continue taking on larger deals, and in that with that, our manufacturing and our operational costs will increase. I hope that answers the question.
Thank you. All good. So what's the current annual production capacity of the Perth facility? At what annual sales level does the company need to substantially expand the facility?
Yeah. So when I first started in the company, we were building 5 or 6 per year. We're now doing between sort of 25 and 30 per year. And I think it was a case of us winning these deals and restructuring the team and restructuring this existing space that we've got to replicate and build at speed and at maintaining the quality. So a lot of work has gone into ensuring that we can build and improve our production. In terms of existing facility, we can essentially double what we've got today. So between 25 and 30, we can go up to 50 per year. Subject to, I've got to put a caveat there, subject to standardization of design. If they're all 50 are bespoke, then we're going to have capacity limitations. One of the things that the board's focus, as far as my targets personally as CEO and managing director is concerned, is to be able to replicate what we build across Australia. And there are many ways we can do it without actually acquiring another site. We have had multiple deals in the past where we've needed to build, between 8 and 10 modules within a short time frame, and we replicate the low IP components externally and do all the high IP, including factory acceptance, and fit out internally. So there's a big fluctuation in what we can actually build even with the current capacity. But I think what will drive new capacity for us and make it, it's an easy decision is, for example, a breakthrough in defense means, an East Coast or, sort of regional New South Wales supported by government is a very easy decision from there on. We will always consider new facilities subject to receiving annual, recurring orders from customers, from major customers. That's the thinking.
Thank you, Shalini. So to target bigger modular sales contracts, will the sales cycle be a lot longer than previous experience, and how is the pipeline building for those kind of deals?
Yeah, so yes, I would say bigger sales contracts means longer, but I think it is important to remember the value proposition of the modular data center versus a brick and mortar solution is always speed. So the compelling reason people come to us in the first place is because they need to get something up and running within 12 months of them contacting us or understanding that this is possible. Whereas, if they're going to go down the path of brick and mortar and acquiring 20 different trades to a site, wherever in the world it is, they would plan around 2 to 3 years of a build. And I'm talking about edge data centers, so anything between sort of 50 kilowatts to 2 megawatts. I'm not talking about 100 megawatts, 200 megawatts, which is the cloud or the AI factories that hyperscalers like NextDC or Equinix is building. That's a completely different build. We are talking about all of the other data centers that needs to fill the ecosystem. So it won't increase much is the point, because there is always a compelling need for it to be deployed fairly quickly.
And then can you speak to tenders you have currently ongoing, and what is the size of this pipeline today versus year on year? Who are your biggest competitors when you are tendering?
Sure. So we are focusing on the sort of, we'll never say no to the $1 to $2 million contracts. Of course, we've always had them. They fill the pipeline, and more and more in the data center industry, we're starting to see the larger and larger deals. And it's also important to remember that with AI coming on, a lot of the deals become more power and cooling centric, which means for one module, your contract size goes up significantly by 5x because of power and cooling prices, which is significantly bigger. So I think depending on the market segment, with landing stations, we see anything between 1 to 2 million right up to 10 million dollar deals. But in the AI market segment, we see anything between 5 and 10 million. And I think in terms of opportunities, they're in terms of mining, I think it's quite standardized. There's a standard product that's out there, and it'll always be in the sort of 1 to 2 million sort of contracts, because you're talking about on-prem site. That's the difference. Edge data centers, how long is a piece of string? If they want to build 10 megawatts, then it's $1 per kilowatt times 10 megawatts. So if we think of who the competitors are, again, it's subject to the market segments. We don't sort of compete on the 50 to 100 megawatt type. We don't even look at 20 megawatts a lot of times. We focus on the 1 to 2 megawatts when a customer has a requirement to develop and deploy quickly. So in Australia, there are other companies that have solutions for the telco market, for instance. They're more shelter fabricators. Our value proposition is because we can build a specific data center solution in the subsea space. We've got know-how and engineering. We don't see a lot of competition in that space, but most definitely, a lot of our sometimes competitors that we might see are the biggest vendors in the world. They're billion-dollar companies, but more and more they're relying on a channel partnership, people like us whom they can sell power and cooling to, that then fully system integrate a total solution and deploy to customers. Hope that makes sense.
Thank you, Shalini. It does. So is there any other takeover interest in DXN, considering takeovers currently happening in the data center industry?
Yeah, there's a lot happening out there, isn't it? Yeah, look, I mean, we've had interest in the past. There was an attempted takeover for in 2022. It was a $80 billion sort of private equity company that wanted the skills and know-how that we've got to build data centers across Australia and across the Asia Pacific. Look, I think it's the nature of the industry. The team continues to focus on business as usual. If there is the right interest and the right opportunity, of course, it's up to the board to decide as and when, any opportunities come along.
Thank you, Shalini. And then last question from me is, what can investors look for in the next 6 to 12 months?
So I think from our point of view, we've provided a guidance to market for FY25. It's the first one we've ever done, as in the first guidance we've ever provided. Obviously, our focus is to, with the recent capital raise that we did a couple of weeks ago, the focus is to double down on the use of funds that we've announced to the market. There's a bit of restructure going on. All good things are happening, to apply to the growing our business. So I think the next 12 months is going to see quite a lot of changes in the industry as well. You'll start seeing a lot more demand coming through for, I guess, the periphery of the data center network around edge data centers and AI applications. So we're super excited about the next 12 months, as we have been over the last, we've seen so much change over the last 6 months.
Thank you, Shalini. So a very great presentation. You sound very busy. We'd love to get you on in the new year. There are a few questions in the Q&A box. If you could have a look at those and answer them if you have the time, it would be greatly appreciated. But thanks again for your presentation and have a great weekend.
Thanks, Abby.